It is finally here, an index to track President Trump's tweets. It's called the VOLFEFE Index, named after Trump's infamous COFEFE tweet. And JPMorgan put it together in an attempt to quantify the impact of the president's tweets in the market. The index takes a look at the movement and implied rate volatility for the 2- and 5-year treasuries. Just a few days ago, Bank of America put out a note saying days in which Trump tweets frequently, the market moves lower, while the days he tweets less, the market usually sees positive returns. So what do you make of this?
Well, it's interesting that somebody's finally done it. I would say that JPMorgan respectfully is probably top ticked in terms of now where we are in the cycle of President Trump's tweets. But I'd also say this, if I were selling volatility, which I agree with Karen, I would be buying market vol and selling COFEFE or VOLFEFE vol, because I do think we're at a point of diminishing marginal returns in terms of what the president tweets and the movements of the market.
You would buy
I'd buy
volatility.
Market vol.
And
I would sell
VOLFEFE.
VOLFEFE, not vol.
Quite a pair trade.
That's a pair trade.
Yeah, it is. It's hard to put on, but yeah.
I don't know. I'm sure someone will make you a market in that. Just
I agree with Guy. I think the Trump tweeting we're making great progress on China has diminishing returns. I think, hereby order, that really packed a punch. that was the most significant one, I think, but it's kind of ridiculous we even have to talk about this, but that's how we...
Consistent with the analysis of VOLFEFE, if you think about where we were on 150 S&P point spread basically for 25 sessions in the middle of what was a very volatile period, it tells you had this smoothing effect in terms of vol. To me, it's all you want Fed-fefe. It's all to me about the Fed. It's all to me what central banks are doing, and I'll track that index because that's the one that I think probably people have not priced in. I think there's too much Fed priced in.
The Fed-fefe of the existing. Fed funds futures would be obvious, or could it just be the 10-year yield?
10-year yield.
Or the 2-year yield,
gold.
maybe.
I think gold prices. We had this blow off top in gold. Maybe it wasn't a blow off top because I'm not sure we're out of the woods in any way. But I do think these are the correlated assets to what has been this deflation story.
I don't think it's surprising that the outcome was the more tweets, more likely down, in the sense that not about your politics. Most of the stuff is somewhat unconventional, right? And outside the typical behavior. And so whether you like him or not, most of that stuff typically works people up. And when people get worked up, it's more likely to go down than up. And that's exactly what they concluded.
It's interesting. JPMorgan said that President Trump has tweeted an average of 10 tweets per day since the start of 2016. He has tweeted 10,000 tweets since the inauguration in 2017. But I do wish, to you guys' points, that they had segmented the impact, or Bank of America, when they did the impact on markets, segmented before versus, let's say, this year, right? Because markets are becoming increasingly inured.
Jinx. I knew you were going to use that word. I'm in your head. I know you don't like it when I'm there, but I agree. I do think, to my earlier point, I think he becomes his tweets make less and less impact on the market, which, by the way, is probably a good thing. To Karen's earlier point, that tweet he put out on that Friday about, I hereby announce, that should have been somewhat catastrophic. It lasted basically a trading day and a half.
If you believe that the information you're getting is accurate, then overall more information is very good for market efficiency. So if you think about where markets are relative to where they were 25 years ago, there was such inefficient information flow that you actually had more volatile markets. And in fact, the prevailing VIX in 20 years ago was probably 22, 23%, not because the world was a bad place, but because we didn't have people constantly tweeting. We didn't have a Federal Reserve whose mandate seems to have been changed to, hey, we have to make sure the market knows everything that's on our mind at all times of the day. And so ultimately, this should be vol dampening anyway, just not sure we're getting all the right information.
Well, I don't know if it's vol. I think uncertainty, and his mercurial moods, that creates uncertainty, just to your point, that markets don't like uncertainty. Right. And a steadier cash stream will trade much better than a very bumpy one that might be higher overall.